We think it's still early to say that. In particular, it's their exposure to the ride-hailing companies, which form quite a significant portion of the Vision Fund's portfolio, which could be most at risk. We think that going forward, it's not just about the potentially lower demand coming out of the coronavirus crisis, but we think there will be a lot of questions asked by regulators, especially around things like employment insurance coverage and the way that these companies use their drivers, which has resulted in significant costs for taxpayers in the US. So we think that it's still early to say that everything's over. And in particular, it's the strategy that SoftBank tends to favor, which involves burning quite a lot of cash to gain market share, that is not in favor right now. And it's not clear that an alternative exists for a lot of the investments in their portfolio. So that is the risk that we think investors should be most cognizant of.
Right, we know that there is some transformation likely to be underway. We were just reporting about the offloading of some assets, yet at the same time, the company announcing yesterday that it will be conducting this sizable share buyback. Is it trying to confuse investors out there about what its strategy is going forward?
We do think that some of its actions have been quite erratic. There seems to be a lot of concern within the company about maintaining the share price at a high level. There are, of course, the shares that Masayoshi Son himself has pledged against various loans. So they do have certain incentives to do so. In terms of the buyback overall, we do feel that it should be positive for the stock. The question is the significance of the impact relative to the actual cost and the potential sacrifices in the long-term value, especially if they give up assets like Alibaba. Though we do have some concerns about the overall stability of the value of Alibaba, especially given the US focus on capital going into Chinese companies, which don't meet US accounting regulations to the standards that the US government expects. So we do think there is some risk to Alibaba from that front.
Right. What about SoftBank specifically? Are you a holder of that stock? Is it something that you'd like to pick up more of? Would you be moving more to an underweight position? Because Masayoshi Son yesterday on this conference call likening himself essentially to Jesus, saying that Jesus is also misunderstood. Is he a visionary investor, and is it something that will attract investors to the stock, do you think?
We are definitely on the more negative side. We do believe that the argument about the discounted NAV makes sense. However, that depends a lot on SoftBank's decision making. And we feel that its unwillingness to monetize its Alibaba stake could at some point make it a forced seller at a point when shares may not be at quite the high prices they are now. So we think there are significant risks that continue to surround the stock, and it's possible that the holding company discount could become even larger. So no, we're definitely on the side of avoiding the stock.
What do you like then in the Japanese market at the moment? Because just yesterday we of course saw Japan technically enter a recession, or officially enter a technical recession. We have of course been going through earnings season over the last week. The outlooks for the current fiscal year are looking fairly dire. A number of companies not providing any guidance, and those that are suggesting that we are going to see a significant pullback in earnings for the current fiscal year that we're in.
Yes, certainly. We think that earnings will look quite dire for the next quarter or two. And given the market's rebound of about 24% from the March bottoms, we're not entirely convinced that expectations have aligned with that. With that said, Topics overall is getting close to book value now. So there definitely are pockets of value. And one area that we definitely like a lot is the gaming sector. So we expect that the shift to more digital distribution will help margins for video game makers overall. And even in terms of the software volumes that the companies are putting out, Nintendo, for example, has had extreme success with its recent Animal Crossing launch. And we expect that trend to continue. And we do feel that there are signs that there's a resurgence in the overall creativity of the Japanese video game makers. So that is a sector that we think investors should be paying attention to on the long side.